this session we are learning about profitability ratios. So in that, first ratio is earning per shares. Okay, so basically what is a profitability ratio? Okay, profitability ratio measures the profitability or the operational efficiency of the firm. Okay, so this ratio also reflects the financial results of the business operations. Okay, so what happens is the results of the firm can be evaluated in terms of its earning with reference to a given level of asset, sales, or owner's interest. Okay, so profitability ratios are basically divided into three categories. Profitability ratios required for the analysis from owner's point of view, then profitability ratios based on assets and investments, and profitability ratios based on sales of the firm. So this earning per share is a profitability ratio, okay, for analysis from owner's point of view. Okay, so this is basically for analysis of owner's point of view. Now what is a formula for the earning per share? Earning per share, okay, also known as EPS, is equal to net profit available to equity shareholders Okay, this is very important. Earning per share are calculated for equity shareholders and not for preference shareholders. Okay, so net profit available to equity shareholders divided by number of ordinary shares that are outstanding. Ordinary shares is equity shares that are outstanding. Okay, so this profitability of the firm from the point of view of ordinary shareholders can be measured in terms of equity share. This ratio is known as earning per share. So each and every equity share will be interested to know what is the earning per share for a current year of the company. Okay, since he has invested his money. So this is how you calculate your earning per share, or it is also known as EPS. Okay, now we'll see one example and calculate earning per share. Now this is an example. Following are the details in the books of ABC Limited. You have particulars, amount, okay, earning before interest and tax 80 lakhs, then interest on debentures is 10%, value of debentures in balance sheet is 2 crores 40 lakhs, income tax is 50%, proposed dividend is 20%. Now this proposed dividend is on equity share. Okay, then share capital 1 lakh equity shares of rupees 100 each, so 1 crore. Share capital 50,000, 10% preference shares of rupees 10 each, 5 lakh rupees. Okay, we are required to calculate earning per share. Now this earning per share is from the equity shareholders point of view. Okay, so profit available to the equity shareholders. Now let's calculate first profit available to the equity shareholders. See, net profit available to the equity shareholders. Let's calculate that first. So net profit available to equity shareholders, right? So let's calculate it. Earning before interest and tax is 80 lakhs. Okay, now we have to reduce interest. Okay, since interest is an allowable expense for the purpose of your income tax, first we'll reduce the interest expense. How much is the interest expense? The interest on debentures is 10%. Okay, so 10% of 2 crore 40 lakh, right? So that comes to 24 lakhs, right? So EBT, that is profit before tax. How much is the profit before tax? 56 lakhs. Okay. Now dividend is not allowed for the purpose of income tax, both your preference share dividend as well as equity share dividend. So first we will reduce your taxes. How much is the taxes? Taxes is 50% provision. Taxes provision 50%. 50% of what? 50% of EBT, that is earning before tax. So that comes to 28 lakhs. Then EAT, earning after taxes, 28 lakhs. Now we need to find out net profit which is available to equity shareholders. So before that, what we have to do is we have to reduce dividend to preference shareholders. Okay, so how much is the dividend to preference shareholders? 50,000, 10% preference shares of rupees 10 each. So 5 lakh, you have 10% dividend. So 10% of 5 lakh. So it comes to 50,000. So 2750. This 2750 is nothing but net profit available for distribution to equity shareholders. Okay, so now we will calculate earning per share. Okay, so that is net profit available for equity shareholders divided by your number of equity shares. So that comes to how much? This is equal to 27,50,000 divided by what is the number of equity shares that we are having? Number of equity shares 1 lakh. So divided by 1 lakh. 1 lakh equity share, right? So your earnings per share is 27.50. Okay, so 27.50 is a earning or a part of net profit which is available to each share. Okay, so this was about earning per share. Now this earning per share, every equity shareholders will be interested to know what is the earning per share, since they should know what is the profit or what is the earning that I am incurring, okay, for the amount invested in the equity share. Okay, so this was about earning per share. Thank you.